So I've called the talk Data and the New Frontiers in Humanity and Business. Really, I want to tell you about the degrees that we offer in mathematical and computer sciences here. And some of what I talk about is actually not so new. Okay, so I've said the new frontiers, but I should be clear that a lot of what I talk about has been known for some time. But then I also talk about things which are a bit more new. Okay, so and really the applications I'm thinking of are related to just generally day-to-day life. So that's why I've put humanity, and also related to business. So hence the title I have today. So who am I? So I'm Alistair Wallis. I apologize in advance if you find me a bit difficult to understand. I come from Scotland, so I have a strange Scottish accent. So please bear with me. I'll try not to speak too fast or too slow. But so this is me. I've been here 5.5 years. So I always tell people, "Saya Ana Malaysia" now. And my background, maybe I say before I move on, is I did my PhD in mathematics, in algebra, which I completed a year before I came here. And then I worked in Ghana in West Africa for 1 year at a maths institute there. And then I came out here. And since I came out here, I've, over the course of about 3 years, I sat 9 of the actuarial papers with the IFOA. So I'm partially qualified as an actuary. So I kind of teach mostly probability theory related courses, because probability theory is something I really enjoy and I think is a lot of fun. And is also useful for actuarial science. So before I get going, let me just say something about Heriot-Watt more generally. So here is a picture of James Watt, okay, a statue that is at the front of our Edinburgh campus. So some of the money that was used to, not at the very foundation of the institute, but at some point in the 19th century, came via the Watt Foundation, and others came via some funds from George Heriot's bequeathment, I think, after he died. So therefore, our university is named after these two people, Heriot and Watt, although the two of them weren't directly involved in founding. Because it was George Heriot was a guy who gave lots of money for education in Edinburgh, and James Watt is a famous scientist. So this is him here. And so we were founded in 1821, and I think it became Heriot-Watt in the late 19th century. Before it became Heriot-Watt, it was just known as the Watt Institute, and before that it was known as, I think, the Edinburgh School of Arts and Science. So we have 3 locations. We have, in fact, 3 campuses in the UK, but 1 main campus in Edinburgh, in Scotland. We have a campus in Dubai, which we've had for just under 16 years now. 15 years. And then Malaysia, which we've been here, 6.5 years, but I've been here 5.5 years since we started undergraduate programs. And we have several of our programs are very well rated, and in particular actuarial science. Heriot-Watt is very known for actuarial science. So you obviously, those of you sitting in this room can know where we are. You've managed to locate the campus. Those watching online, our campus, it's a green campus because we've got grass on the roof, which is green. So we've been here since 2013. But this particular campus we opened in 2014 when I first arrived. And we have about 2,300 students now and about 230 staff in total. So things that just in general about the university. So campus transfers are guaranteed. So in fact, for actuarial science, we had about almost 40 students who left after the end of their second year and did their final year at the Edinburgh campus. So we can even, that kind of large number can go in 1 year if they want. So campus transfers are guaranteed, provided you meet the progression requirements. So in particular, if you need to do resits and things like that, you may not be able to transfer, but essentially, provided you pass everything, you can transfer. When you transfer, there's a 20% tuition fee waiver. You can study for as little as 1 semester, or you can study for a whole year, or you can study for multiple years. So for example, I'm teaching second year just now. I had 7 students from the UK in my class last semester. This semester I actually have, I think all 7 of them are still here, and I have 4 more. So I actually have 11 British students in my class right now. You can, as I say, you can actually study right until the end of your degree at other campuses. So for our program is only in Malaysia and UK at the moment, that I'm going to talk about, but for other degrees, you could in fact spend a year in Dubai as well. So you could have three different locations over the course of 3 years. Okay, so here's some pictures of our campuses. So what I want to do to start with is start with saying what is an actuary, and then tell you a little bit about our degree once I've gone through that. So if I were to add certain key words describing the main things that these professions would have to think about, these are some words you might associate. So a manager, their key focus is strategy, or let's say an accountant, one of their key things is their balance sheet, and so on. So if I were to do the same thing for an actuary, can any of you think of a word that would be good to associate for an actuary? Maybe suggestions. Risk. Okay, so that's actually the word I was thinking of. So on the first attempt, you've got the word I was thinking of. Of course, there are other things as well, but I would say that risk is the kind of central thing that an actuary must think about. Okay, and I'll say a bit more about what I mean by risk in a minute. Okay, so the key point to note is that actuaries are experts in risk management. So they're experts in how do we manage risk. So what is an actuary? They're a trained professional who evaluates financial risks and then designs ways to mitigate or reduce the impact of the uncertainty of future events. This is a kind of broad kind of definition of what one would think of as an actuary. So they're a trained professional, so they're accredited by professional bodies, and they must follow, not only have the accreditation in terms of knowledge, but also in terms of professionalism. So they should be professional in the way that they operate. So that means upholding certain ethical standards and so on. When I say financial risks, and in terms of uncertainty, the point is that we don't know what's going to happen in the future. There are all sorts of areas where there's unpredictability in the future. And in particular, if it involves money, then of course some companies are willing to pay people to deal with that uncertainty. And what actuaries do is try and handle the uncertainty and make it, in some sense, more certain. So, in other words, they try and work out ways of reducing the level of uncertainty in certain ways, in terms of, let's say, the transfer of money. So, sorry, I don't know why the clicker is not working today. It normally works fine. So what do actuaries do? Okay, so you need to use probability theory to calculate the likelihood of an event, and then once you have that, then you have to calculate the costs associated with that event. So essentially, you're mathematically calculating risk. But you also, in addition to all this maths and these calculations, you also need to understand how businesses respond to economic changes. So you should know a little bit about economics. I guess the behavior of people is something that's going to become increasingly important. And you also need to know about government regulations. So the traditional areas where actuaries work would include insurance and pensions and investment. Let me tell you a little bit about those things. So one key area where you find actuaries is in the pricing of the premiums for insurance products. Okay, so let me explain the idea for that. So there are different types of insurance. You have, let's say, car insurance, you have medical insurance, you have life insurance, and so on. All of these things, you don't know what's going to happen in the future, and you don't know when it's going to happen. So let's say take the example of medical insurance. You don't know if you have someone who has medical insurance if they're going to get ill at all. And if they do get ill, you don't know what kind of illness they're going to have. You don't know if they're going to require hospitalization. You don't know if they require this benefit. You don't know if they require that benefit, and so on. So if you come up with a medical insurance scheme with certain benefits associated with that scheme, you need to work out what is the actual cost to the company of those benefits. So in other words, what do you charge your policyholders for those benefits? Okay, and so what an actuary would do is think, okay, what is the probability of a whole lot of uncertain things happening in the future? What are the costs associated with those things? And then based on that information, work out the expected amount that someone is going to benefit from having that insurance policy. So work out, on average, from that policyholder, if you average over all policyholders who have that particular type of policy, what is the expected cost associated with that policyholder in terms of benefits. And then that will be the amount you charge. Of course, you might charge a little bit more because you need profit and you have the costs of running the business and so on. But that's the kind of way of thinking. But not only pricing, you also have people working in reinsurance. In fact, I think I want to give the next example first. So you have, still within an insurance company, you have what's called claim and loss reserving. So the idea here is, imagine you receive all this money in. You have to make sure that you have enough money in the bank so that if someone makes a claim, you can pay them. So if someone has a car accident and they make a claim to their insurance provider, that insurance provider, legally they've made a contract, they should provide some money associated with that claim. So they need to have that money available. And to have that money available is called reserving. So actuaries also do this. So they have to monitor how much money is being kept in the bank. And you imagine maybe for 1 year, it sounds like, okay, this is fine. Someone pays their car insurance every year. There are so many claims per year. But then you think, okay, what about life insurance? Someone starts paying in money when they're age 30, let's say, but they might not die until, let's say, they're 70 or 80. So the insurance company has to make sure there's enough money to pay those people, whether they die today or whether they die in 40, 50 years' time. So you have to think very much in the long term, and this is the idea of reserving. And so the combination of these two things, in terms of pricing and reserving, is making sure the right amount of money is coming in, and that you're making sure you have enough money to pay everyone who's due a payment. Now, part of that is thinking, what is the expected amount you're going to be paid out? But you also have to, and this is where the statistics comes into it, the probability theory, you have to have maybe some kind of confidence interval about how much is going to be paid out or how much you might require, because all this stuff is uncertain. So you need to make sure you have enough in case you have lots of payouts. And in fact, it's possible you might have very big payouts. So you imagine if there's flooding and you have home insurance, then in that case, lots of people are going to make claims at the same time because lots of houses are being flooded at the same time. So the idea of reinsurance, where actuaries also work, is that it's essentially, in very simple terms, insurance for insurance companies. So normally reinsurance companies will be multinational companies, and so what will happen is if there is flooding in Malaysia one month, maybe another month there are forest fires in Australia, another month there are extreme storms in the US. And so because it's not all happening at the same time, the reinsurance company has, in some sense, a predictable outflow of payments. It's just it's going to different companies, different regions at different times. Okay, so that's somehow the idea of reinsurance. I've talked quite a bit about insurance and the different types of insurance. There's also pensions. So again, some people retire when they're 60 and then they live for 1 year. Some people might not reach retirement age. Other people, like my grandfather, for example, live to the age of 100 and end up receiving pension for 40 years. So his government pension in the UK, it cost the government quite a bit over the course of 40 years. So things like EPF, they have a certain promise of how much they're going to pay out. So they have to think about how much should be taken in. And you can, of course, they do some kind of investment with that money. And so it's not fully predictable how much is going to come out. But they need to be able to make sure the right amount of money is there to pay people at the end. Okay, you could now have some actuaries who also work in business insurance. Another area is in terms of asset and liability management. So part of the idea here is if you have an insurance company, they're receiving lots of money, or a pension company, they receive lots of money. They now need to think, how do I actually spend all this money? So they potentially will be doing some kind of investments with that money. We have quite a few actuaries work in terms of merger and acquisitions. And in fact, I talked earlier about actuaries being professionals. So we have actuaries who work in, like, let's say, central banks. So let's say Bank Negara here, or we have in Bursa, Malaysia, doing stuff to regulations. Okay, so we have quite a few of our former students who work at Bank Negara, working in the terms of regulations and legislation. Okay, so I've kind of mentioned all these things, but really, the places where actuaries work, insurance is the traditional area, and more are working in, say, TACAFUL, so that's Islamic insurance. But also in terms of investment, in terms of banking, finances, you also have a number of actuaries. And in the government, I mentioned Bank Negara. I shouldn't have put this under government, but colleges and universities. So you've got people like myself doing teaching who are partially qualified. So really, anywhere there is a need to manage risk, you can potentially find actuaries. There are many professional bodies. I made a list of some of the main ones here. Just the key takeaway here is that there's one in Malaysia, but they don't do any of the professional exams. So you need to do the professional exams with a different body and qualify with them and then join Actuarial Society of Malaysia. The two largest are the IFOA and SOA, so I'll mention this on my next slide. And but there are obviously many other ones in other countries. So as I say, these are the two largest. And essentially, if you get to a certain qualification level in one of these bodies, you can then join the Actuarial Society of Malaysia. So I'm a member of both the IFOA, the Institute and Faculty of Actuaries, and I'm also a member of the Actuarial Society of Malaysia. Let me focus on the IFOA examinations. And I guess some of you will have heard something about the SOA ones as well. So the SOA don't actually do accreditation in terms of providing exemptions from universities. So what they have is something called VEEs, which used to be about 3. I think it's gone up recently. And if you do an actuarial degree, basically you can claim those things. But even if you don't do an actuarial degree, you would actually sit them separately from the SOA. So they don't actually administer those bits of the exams. And then their later exams, if you were to go the SOA route, you would then need to sit the exams in addition to attending university. So they have something called universities and colleges with approved programs, actuarial programs, such as Heriot-Watt, that they list on their website. And so the idea there is that the university covers the material, but there aren't actually exemptions available, so instead you would sit the exams while you're studying. But we actually have the full accreditation for the Institute and Faculty of Actuaries, so I want to focus on that. Because in fact you can get up to 6 from our undergraduate degree. So this is under the current curriculum where you have to do 13 to become a fellow. So there are 4 stages. There's the core principles, the core practice, specialist principles, and specialist advanced. These 2 you can choose depending on what subject area you want to focus in. The first 10 are required to become an associate, and then the next 3 are required to become a fellow. For both becoming an associate and a fellow, you also need suitable amount of working experience and to do some exams in professionalism as well. So from our degree, you get 6 of these papers if you do sufficiently well in our degree. And if you do our masters, which we don't have at the Malaysia campus but do in the UK, then you can get a further 5, which would be these 3 plus 2 of these. So you would just be remaining 1 paper to become an associate, because you'd have these 10, you need 1 more, and you just have 1 more paper to become a fellow if you did the masters in the UK. But of course that's optional. You could be doing all the exams while you're working. And for the IFOA in Malaysia, you can sit the exams in the British Council in KL, and you can also sit them in the British Council in Penang as well. So there's 2, at least at the moment, 2 examining centres. So what is our program structure? So I think the key thing I wanted to emphasize is that it's really a mathematics-based degree. So in the first year, really you do 5 courses which are just maths and stats, so algebra, calculus, real analysis, probability, and statistics. You also do a course and a half to do with actuarial and financial maths, where you learn about this idea that, say, 10 ringgits today is not worth the same as, say, 10 ringgits in 20 years' time. You have things like interest rates, you have inflation to take into account. And then you do 1 course which is an introduction to accounting and finance. So some of our students have already seen accounting in advance, but this means that if you haven't, you get to see this as part of your degree. And this also counts towards the CB1 paper from the IFOA. And then there's a new course we've just added in for this September, which is an algorithmic and scientific programming, which will be a half course in the first semester learning basic R and Python. So throughout the degree, you'll see quite a lot of R and a little bit of Python within the degree. But then second year, it becomes more specialized. You still do courses in probability and statistics. I teach, for example, the stochastic processes and the survival models courses. So this is about random processes in time. Survival models is about modeling life expectancy, so a nice cheerful topic. And then the other courses, you can do 2 courses in life insurance pricing, some of the stuff I've been talking about already. And you would also do 2 courses in financial economics, which is about doing the mathematics of pricing products which are based on some kind of underlying asset, like a share or oil or gold or something like that. And these are sold on Bursa Malaysia, the Malaysian Stock Exchange. And then the third year, you can do more courses to do with insurance or to do with this financial economics. We also have this course in machine learning, which is an optional course for the actuarial science degree. And so this gives this is part of me saying the new frontier. So there are obviously new things available in terms of how we deal with data. So machine learning is really about how do you make use of computers to learn even more from data, especially if you have big data sets. So in terms of these exemptions, so our first graduates, about so 12 out of 19 in Malaysia, and in fact we had 11 Go Global students, so I want to include them as well, so it seems a little bit more. So we had lots of more started in Malaysia. So 8 out of the Go Global received all 8 exemptions. So it used to be 8 rather than 6, but the IFOA changed their exam structure. And so the key message I want to take away is, although it might seem like a challenging degree, if you work hard, there is a good chance that you will get the full suite of exemptions. And our entry requirements, which I'll mention in a minute, are such that we expect the majority of almost all our students will graduate after the full degree. So we set them so that we hope that everyone can complete the degree. Just to include a different type of graphic, so our second graduates, you see that this big blue chunk got first class degrees, so that's averaging over 70%, and this red chunk got the upper second. So that means that, in fact, over 50% got all 8 of the exemptions just through this thing we call the block exemption, which I won't talk too much about because of time, but basically they got an average of 65% or more in their final 2 years and were able to get all 8. We also had a bunch of students just got them individually based on the courses they did, and so we had even more students who got all 8 for the individual exemptions, and then the majority of other students, in particular, I would say all the ones in these two, would have got close to all 8. So we have a number of students get these things. So let me just break up all this talk about maths and so on by mentioning that we have very active student societies. For the Student Actuarial Society, which has been formed for a few years, and the Society for Statistical Data Science Students, which is called SOLID, which was formed this year, but they're already being very active. So they organize lots of social events. So here's some photos. Lots of fun things they're doing outside of class. They also do this peer-to-peer tutoring program. So we have older students will do tutorials for the first year students, and this has been running for the past few years, and I think it's been quite successful. This is in addition to their regular classes, obviously. And they do fun things like, we've had wall climbing, we've had movie night. That's strange. I don't know why that appeared afterwards. So they have obviously this book of faces and this gram of Instas or whatever this modern stuff is. And we have lots of field trips to companies. So we've had field trips to AIA, Great Eastern, Bank Negara, Bursa Malaysia. So you can, me briefly showing these, you can try and see which ones I went to with the students. I mentioned entry requirements. So I haven't listed everything here, and there's a bunch of qualifications. It would be on a case-to-case basis. But I guess the majority of our students come from A-level, UEC, or our own foundation program. So this gives us the requirements. So basically, the key thing is an A in maths. We really need to have strong maths background to come into our actuarial degree. Let me say something about what it's all about. So we have lots of data. I mean, in the past there was lots of data, but nowadays we have even more data for various reasons, okay? You've got companies like Facebook or Amazon which collect huge amounts of data. So what do we do with all this data? Well, we can try and get some insights from this data. And this is the idea of data science. So it's really about having insights from data. And when people say data science, I guess the implication is traditionally people will use statistics to study data, but data science, the implication is that you have a greater reliance on computers as part of getting insights from data. So you need to know about programming, and you also need to know about statistics. And one could say, I mean, this is a quote from someone, that it's data science is a concept to unify statistics, data analysis, machine learning, and their related methods. Okay, so broadly speaking, I mean, this is the way I divide it. So those watching at home, if they Google these terms, they find that there'll be different people will think in different ways. So this is the way I broadly think of data science. And maybe this is a slightly old-fashioned way of thinking about it, but broadly speaking, I would say there's kind of data analysis, which is really about you model the data to try and understand it. So understanding is key, and you might try and link this particular variable with this other type of variable, or this combination of variables with this combination of variables. So you try and make some kind of linkage there, and you try and understand what the data is telling you. And then using that understanding, you try and make future predictions. So this really requires some knowledge of stats, or in particular if you want to do a lot of this kind of stuff. But then you also have, let's say, data mining or machine learning, which the way I see it is sometimes you're less looking for understanding the data, but you're really using the data to both make predictions. You might not understand where those predictions come from, and also to try and just make decisions. So without even knowing why you made those decisions. Of course, in an ideal world, you would know why you made those decisions. So you might, in essence, just try and make some more informed decisions. So the applications are everywhere, okay? So I mentioned economics, medicine, social sciences, environmental sciences, all over the place. And it's the backbone of things like artificial intelligence and robotics and all these kind of things. You need this kind of data science. And just to link it to what I've been talking about, when we're trying to price insurance products, there's something called underwriting, which is basically finding out about the person who buys the insurance so you can give them the appropriate price based on their risk. But you have ideas of like automatic underwriting, and there's future changes to underwriting in the future. So for example, nowadays people often wear these watches that track the number of steps, and this will probably happen even more in the future. At the moment it's obviously limited. So potentially an insurance company, when they're charging their annual fee for insurance, they could ask how many steps has this person walked? And the more steps they've walked, that gives them an idea of how healthy the person is and how much risk they have of needing a health insurance claim or a life insurance claim. So this is obviously a kind of new application. So I guess some of the key industries I've listed here. I've mentioned market research. So the idea here is that suppose you have a coffee chain and they want to say, should we try and sell more of a certain product at a particular time of day, or should we open up a new store, or in this area that we've not explored, and so on. So they might get some company that does market research and tries and uses the data to try and come up with ideas of whether to do this or not. And this is really a massively growing area. I mentioned e-commerce here. So just to give you an idea of where things were just a few years ago. So I used to buy a lot of books online, and I used to buy a lot of CDs online on Amazon. And there was one time I walked into a physical bookshop, I bought a book, I got home, and then I checked my email, and the email said, would you be interested to buy this book? And that was just when I got home from actually having bought the book. And if I recall correctly, that book in particular was a book on ancient Babylonian, so the language spoken in Syria and Iraq about 3,500 years ago, which is a slightly obscure book. I'm not sure how many of you own a book on ancient Babylonian. But obviously this is like 12, 13 years ago. Amazon already knew me that well. They were able to make that suggestion based on my past history. So you can just imagine today what people are able to do. Okay, and just thinking in terms of suggestions for like advertising, you imagine, say, Facebook does all this targeted advertising. So they look at some person's profile, who they're friends with, and they decide, okay, this person has this income level, this person has this, let's say, age, and so on, and then target the adverts based on that. And in the past, they were quite inaccurate. They're getting more and more accurate the more people who are working on these things. So I've had some strange suggestions in the past that are totally not fitting my demographic, but it's definitely improving over time. And there are also some other areas, let's say fraud detection. I mentioned manufacturing, so companies want to improve the way that they make things, so they will make use of data science. So let me talk about our degree. So at the moment, our other degree we offer is the Statistical Data Science degree. So it's accredited by the Royal Statistical Society, but it doesn't have a kind of professional accreditation because data science is not like actuarial science where they're normally professional bodies. And we started offering it in Malaysia in 2018, so our first batch won't graduate until next year. And it's very much a similar structure to our actuarial science degree, except for, so the first year is in common even, except for there's a greater emphasis on statistics and kind of data science applications, and you do less of the courses that are to do with insurance. And in particular, in the final year, you do dissertations, one each semester in statistics, where you can apply these ideas. And I should point out that entry requirements and fees are the same. So who should apply for this degree? It's really those who have a strong interest in maths and stats and also keen to develop their programming skills. So I mentioned already that our actuarial science degree, we have this R is used throughout the degree. This degree would use it even more, and you'd use some Python in a couple of courses, and in their dissertation they would use these languages. But it's really a maths and stats focused degree. So some universities will have data science degrees which are really computer science side of the spectrum, and ours is really towards the maths and stats part of the spectrum. And I will mention later about a new degree we plan to launch but are still awaiting approval. So as I say, year one is the same. So it will still have the actual and financial maths courses, so that if you want to switch between degrees, there's no issue. Okay, that's basically the reason for this. But then year two, you really focus on a whole of probability and statistics. And you can also take some options in this financial economics, but you don't do the insurance courses. And then in the final year, you would, as I say, you have to do these dissertations, you have to do the machine learning course, and you know the time series is more stats, optimization, a mixture of maths and stats, and you have a bunch of options and electives. Why choose Heriot-Watt? So as I say, it's got a strong maths and stats underpinning. So knowing the maths and stats not just allows you to input the algorithms, but potentially you can learn how to design algorithms for learning things in terms of data science, and also just in terms of understanding the output, if you actually understand the mathematics involved. The university won prizes in the UK campus for this Amazon Alexa prize. So it was a finalist for both 2017 and 2018. So research that Heriot-Watt has done has gone into programming Amazon Alexa, for those of you familiar with it. So it's the kind of box you have in your room, and you tell it, turn off lights, turn on lights, and so on. But the idea is in the future, you can do more advanced things like order some more milk. My fridge is running low, and it can predict certain things like that. Edinburgh is actually the site now of the National Roboterium for the UK. So it's really, between Heriot-Watt University and University of Edinburgh, are really big centres for robotics in the UK. And the director is at Heriot-Watt. And I put in red here at the bottom, we have scholarships available, these Data Futures scholarships. So we have 9 scholarships available, 3 100% and 6 50%. So these will also be available for our new degree if it's approved. And really, this is to encourage more people to do data science, because the Malaysian government, the immediate past one, the one a bit longer ago, and probably the current government, although it's very new, all agree on at least one thing, which is that we need more data science or data professionals in Malaysia. Okay, and at the moment, there's a need within the market, and kind of competitive starting salaries. So now is the time for question and answer, for questions from people in this audience, and answer for your benefit and also those who will watch the edited version later on their computer. So any questions for me now? Hey.
Yes, hi. The content of the program that you have designed here is very statistical based, and there are some applications for that in the financial industry. For instance, in terms of derivative products,
Yeah.
or structured equity products, or even quantitative investing, things like that. But I don't see the progression towards that part of the industry. So I'm just wondering whether a graduate in your course might be able to somehow find employment in that area.
Sure. So I guess you're talking more of our statistical data science degree or the actuarial science. So in the actuarial science degree, the year 2 courses in financial economics, so in terms of derivative pricing, both of them are compulsory, and there's an option one in the final year. For our statistical data science degree, the first of the 3 courses, so 2 second year, 1 third year, the first is compulsory, and then the second and third are optional. So it's possible for people to do the degree will learn quite a lot about derivative pricing as part of the degree. And then if they're particularly interested in finance, potentially they could do a project as part of the dissertation either semester in that kind of area. So hopefully that kind of answers your question a bit. Okay, so I think if you have more questions, you can try asking me them on Pigeonhole, and I will be doing this live broadcast on Facebook, which I'm even more nervous about than having this camera videoing me today. I'm absolutely fine with teaching 200 students in one class or 100 students in one class, but the camera is making me a little bit nervous. So we'll see how that goes. And then I'll still be here for another couple of hours. So if you have questions after I finish my live Q&A, you can find me in the open day area. So thank you all for your time. Thank you for coming today. And even if you don't choose one of our degrees, I wish all the students amongst you well for the future, both those who've had their SPM results and those still awaiting results for other qualifications. Thank you.